I'm James Mworia. I'm the Group CEO of Centum Investment, and I was until last year on the board of GenAfrica, where we had a 74% equity stake. The story of GenAfrica and our involvement with it goes back to 2013. I remember I was attending an investment conference, and at tea time a friend of mine mentioned to me that he had heard that Genesis was on sale, and that their major shareholder, who had the name Genesis, which was a UK-based asset management company, wanted to sell their stake. I think it was about 60-something%. He did not have much details, but I'd had an opportunity to interact with Genesis before. Genesis was at that time maybe the second or third largest asset management company in the country, focusing mainly on managing pension funds in the public markets, so largely in fixed income, in equities, in the equities market, they had some real estate. At that time they were managing slightly around 100 billion shillings. I also knew the team. We'd sat on the same board of CDSC with Charles Ogalo, who was the CEO and still I think is now the outgoing CEO of Genesis. He was at the time the CEO. We had been on the board in the CDSC with him. I'd been on the board of Muhasibu with Patrick Kariuki. I was two of their investment managers were my students in Strathmore when I was teaching CFA. This was Fahima Zain and Steve Wamadhai. So I knew the team relatively well. We had a good relationship. I had a good feeling about what we could do with that team in terms of growing the business. Genesis had a very good reputation as a very credible investment manager, very high levels of professionalism and integrity. And I thought, look, if Genesis is leaving, this is probably an interesting opportunity for us to look at. We did not have any exposure at the time in the asset management business. We had NABO, but it was relatively small, and our focus was largely on alternative assets as opposed to mainstream pension funds. So I then tried to reach Charles, and I could not get a hold of him. I only got a hold of him at 4 in the evening. And we had some pleasantries, and then Charles told me, look, I think James is a bit too late. We've been in this process for a while, and I thought you knew. I didn't know. And we're about to sign. In fact, we may be signing. The sellers are here to consider the offers. We are meeting tomorrow morning, and the board is being convened, and we are going to be signing with one of the buyers. So I said, okay. I think I want to put in my offer. And he said, I think it's a bit late, but why don't you talk to the seller himself? So he gave me the number of this gentleman. I called him, and I could not get a hold of him until around 7 p.m. So I introduced myself. I'm James Mworia. I'm the CEO of Centum. I understand you're looking to sell your stake. I'm interested. And he listens and he says, oh, unfortunately, you're a bit too late. We've more or less concluded the process, and in fact, we'll be approving tomorrow. Now, I told him we are a very serious entity, even though I know you've not yet signed, so it's not too late. You can expect our offer by tomorrow morning when you convene. And my recommendation is that you take it very, very seriously. It's going to be a very serious offer. And what we put on the table, we are going to close. So he didn't know. He had never heard from me, and I also did not know him. I spoke to my friend Patrick. We had no information. We had very limited information. So the key driver of value in that industry is the assets under management. Because the revenue driver is the assets under management. You charge fees on those assets under management. You have a fairly stable cost base, so everything else goes to the bottom line. They are a regulated entity, so the accounts are in the newspaper. So Charles shared with me the recent accounts, which had been published anyway, and their AUM number. And that's all I had. We then sat down with the chairman of the investment committee of Centum. I managed to reach him at 9 p.m. at night. And we had a discussion, and I told him I think this is my view. This is an excellent investment opportunity. There are very few asset managers in the country of that scale, so it's not an asset you can come across at any other time. If this opportunity passes us, I think it's something we should go for. And my own sense is that we should be able to drive these assets under management to grow to a much higher level than they are today. We had about a 15-minute chat with Dr. Chris Kirubi, and he said, James, I agree with you, go for it. I then went to the office. That time we were in International House, and we started working on our offer. Put together a very comprehensive 7-page offer of what price we're offering. I think we offered about 1.3% of the then assets under management, so it was about 1.3 billion, and the value would bring into the business. Because we are buying shares from a growing shareholder, what would be different? The brand, the support would give them around geographical expansion, the product expansion capabilities, the governance, and that our acquisition of the business would be in the interest of the remaining shareholders, who are also members of management. So I remember I did not even have any staff in the office because we're doing all this. All this is on the same day. This story began at 10. Now we are at maybe at midnight of the same day. Eventually concluded the offer at around 1 a.m. And so finished, signed, scanned, and sent it to them. And then spoke to our office driver, asked him to be in the office first thing in the morning at 6, pick the offers, take them to the company. And then first thing in the morning, I called all the members of the board and let them know we've submitted a very serious binding offer. It's an offer they should consider very, very seriously. It's an excellent opportunity for everybody. So when they met at the board now, what was meant to be a confirmation of a sale to another party turned out to be a consideration of a totally new offer that had come just that morning, overnight. And that was from us. And at lunchtime, I received a call, and they said, James, we've accepted the offer. That was the following day. So it was slightly over 24 hours. So where the door was shut, it opened, and that's how we got in. And we had a meeting, and we started working on the due diligence process and the documentation process. That took the better part of that year. We concluded that deal in January of 2014. And we not only now bought Genesis shares, but we also bought some of the shares from the management. We ended up at around 74%. We also persuaded them not to sell all their shares. Said, look, we're going to create value, and you're going to be a beneficiary of that value enhancement. So let's remain partners. The market was very anxious because Genesis had been with the business for a long time, and it was now acquired by Centum. And our strategy always is to take any business to a better place and not to bring risks that they did not have. And so it was important to put in place structures that would eliminate not just the existence, but the perception of conflict of interest between what Genesis was doing as a manager of pension funds and what we were doing as the rest of our businesses around investing and the rest, because there was a perception that we'll probably use those funds to channel them to the rest of our investments. And so we created those structures, and actually were very strict in ensuring that we did not target any of the GenAfrica investors in our investments. The second challenge we had is that as part of the exit process, Genesis was keen that they drop the name Genesis. And this business has been known as Genesis for a long time. Their clients were very jittery. What would happen? What would happen to the investment process? Would the management change? And so we did a lot of work with Charles, Patrick, Fahima, Wamadhai, and all the rest of the team in coming up with a plan and then meeting all the trustees of the business to persuade them that actually we would have a better business than we had before. And so part of the process was then coming up with a new name. And that's how we brought in our marketing team from Centum Business Solutions. They worked with them and they came up with the name GenAfrica and rebranded from Genesis to GenAfrica. And around that time, I remember we met at then Fairview Hotel to work on our strategy. And the strategy, the objective was to grow AUMs, assets under management, and to therefore enhance profitability. And how we were going to do it was we're going to come up with a range of new products. The management team of GenAfrica now had always had the idea of introducing a number of new products in the market. But the risk appetite of their then shareholder, Genesis, was such that they could not get those approvals. So we had a different view as to the risk of those particular products. And so we were quite supportive of management's efforts to diversify outside the traditional lines of products that they had to new products and to expose these products to their clients. The second how was then also geographical diversification for them to go to other markets. And we started off with Uganda, where we already have a presence. So supporting them to get into the Uganda market, getting members of the board for that business in Uganda to help them with the business development initiatives there. Then governance also, bringing independent members to the board of GenAfrica. We brought in Andrew Msangi and Kadri Nigade, and they were our representatives. We brought them in as independent board members. And the interesting thing is that even after we left, although they had been nominated by Centum, the management and even the incoming shareholder asked for them to remain as directors of the board. The other area now was also risk management. They did not have an in-house independent risk management team. And so we also brought in our risk management team from CBS to also support. So they outsourced the risk management function to CBS. And then we helped them recruit an internal audit function. So within sort of a couple of months of our acquisition, we had a strategy we had all signed up on. We were working on the rebrand. We had strengthened the board. We had strengthened the risk function. We had addressed the internal audit function. So we had put in place, and also we had reassured the team. So we had no staff losses and also no client losses. So in that whole process, we did not lose any client. So we were on a platform for growth. I must give a lot of credit to the GenAfrica team, because I did not have to be personally involved in their day-to-day management processes. The role we largely played was enabling them to succeed, and having a wonderful alignment between the major shareholder, them as minority shareholders, and also as parties running the business. They also are parties of very high integrity and very high degree of professionalism. So we typically have breakfast with Charles, discuss the business, what's happening, what he's thinking about. And my role was to be more of a supporter to Charles and his team. And they did an incredible job. Within about 3 to 4 years, they had doubled their assets under management to close to 200 billion shillings. We had expanded to Uganda, which was again a fairly successful business. We had rebranded. We had launched new products, and it was time for us to move on. And even when we made that decision, and I had that discussion with Charles, the point I made to him is that we would do our best to make sure we brought you a shareholder who was as strong or stronger than we were, and who would carry on with the trajectory that you are on, in the interest of not just the company, but the clients, the staff, and everybody else. And so this particular business, we came in at about 1.3 billion shillings valuation. We eventually secured an exit valuation of 2.3 billion shillings. In the period, we had paid dividends of slightly more than 300 million shillings. the management of GenAfrica exited with us. They sold some of their shares with the same control premium that we had secured, because we were selling a controlling stake. They had a minority stake. And as part of the deal, we negotiated for them to sell some of their shares alongside ours at the same valuation. And even the incoming shareholder, since they came in, the business has continued to grow beyond where it was. They have kept largely the structures that we had put in place. And therefore, I think this is another interesting case study where you had a system that was largely working, an organization that was largely working, but which had significant potential for growth, and which we were able to unlock by virtue of our understanding of the local market, and therefore able to take a different view on risk management. So even where in the past the previous shareholder had prevented them from going to certain products because they don't have the risk management capability, we're able to enable it by providing a risk management capability. So rather than say no, say yes, and then provide the capabilities, the governance and the risk management structures to enable the business manage the risks and to enable them perform for their clients, and largely retain the team and support them largely from a strategic guidance perspective. The business ran fairly independently. We kept very clear separation and avoided a lot of the conflicts that would have perceived. And when we exited, it has continued to be a strong business, and we've continued to have an excellent relationship with the team there. And so I think we accomplished our mission with GenAfrica. We found an organization that was good, and I think we played our role in making it great and positioned it to be an even better player in the market. By the time we left, we were probably number 2 in the market, and from a profitability point of view, they may have been the most profitable in the market.